and welcome to Merchant Link's Payments Education Series. I'm Beth McGarity, Marketing Manager for Merchant Link, and your host.
And I'm Zachary Minton, your Payments Education News Anchor and Manager of Merchant Link's Learning and Development Division.
We are delighted you've joined us for this first installment in a series of on-demand webcasts. We know your time is valuable, and so we've divided the series into 4 videos, each that run about 5 to 7 minutes. We'll follow this series with a couple of live webinars where you'll have the opportunity to ask questions and to learn best practices for managing your payments.
That's right, Beth. And at Merchant Link, we're devoted to continuing education for our employees, merchants, and customers. In this first course, we'll cover the basics on how your transactions travel across the electronic rails to the financial institutions and what players are involved in the process. In our second course, we'll discuss the fees associated with each transaction and the card economics most important to you. The third course will focus specifically on variations in fees, known as interchange, and the cost basis for issuer reimbursement on transactions. Lastly, the fourth video will be a discovery of the process for managing your merchant services agreement, along with tips to qualify for the best rates possible.
So Zach, what should our merchants understand first about their electronic card transactions?
Well, Beth, most of our hospitality and retail merchants already understand that credit and debit transactions occur in a 2-step process called authorizations and settlements. At the merchant's point of sale or property management system, when they swipe their customer's credit card, their system sends an electronic message to obtain authorization for the sale amount. The authorization number returned guarantees the merchant receives payment for that card transaction. Once they finalize the sale, say after they've added a tip amount to the check, the merchant sends a batch of transactions to the processor in one settlement file. There is generally a 24 to 48-hour processing time before the merchant actually sees funds deposited into their account.
And how much should merchants understand about the players involved in delivering and processing each transaction?
Actually, Beth, the more merchants understand about the players, the more they can take an active role in managing their costs.
Can you walk us through a simple credit card transaction and introduce us to the players?
Absolutely. Let's start by taking a look at a diagram of the transaction process. When a merchant accepts a card payment, they initiate a message through their system to obtain authorization. The first stop on the transaction's journey is the payment gateway, such as Merchant Link. The gateway acts as a translator and modifies that transaction message into a format that the processor will understand. The gateway gives merchants the flexibility to choose from a range of processors and switch amongst them quickly and efficiently without having to make major modifications to their systems. Because the gateway is the first touch point for every transaction, this is also the perfect opportunity to secure the cardholder's data by encrypting the transaction and tokenizing the card number. The next destination for the transaction is the merchant's processor. Through the merchant service agreement with their acquiring bank, the processor routes each transaction to the appropriate financial institution for each card type, such as Visa, MasterCard, or American Express. The processor recognizes the merchant by their merchant ID and then determines where to send the transaction based on the card number. At this point, the message either goes directly to the issuing card company or passes through the card associations. The next stop on the journey is the card associations. Visa and MasterCard are both associations of member banks that regulate the rules for accepting and issuing credit cards. In addition, they're also at the forefront of governing regulations on security standards to protect cardholder data, as well as the fees associated with card transactions. After the transaction passes through the association, it then travels to the bank or financial institution that issued the card to the customer. Next, the issuer checks the customer's account for available credit or an available balance to cover the sale and responds with either an authorized or declined message. When authorized, a 6-digit authorization number is included in the transaction response. From this point, the response message travels back to the processor, through the gateway, and finally back to the merchant as an agreement to pay the merchant for the amount authorized. For every credit or debit transaction a merchant accepts, each authorization request follows the same journey and touches the same players every time.
So how might the process be different for a settlement message, and when does the merchant actually see the funds deposited in their account?
Essentially, at the end of each day's business, a merchant tallies the final sale amounts and sends one batch file of settlement requests. The merchant forwards the batch to the gateway, and the gateway delivers the batch to the processor. At this point, the processor routes and sorts all transactions in the batch to the appropriate card company or bank for settlement. Often, this is referred to as a back-end processor function versus the front end, where an authorization requires an immediate response. Once the processor transmits the settlement records to each financial institution, funds then move from every cardholder's account back to the processor. The processor deducts the fees from the total batch amount and finally deposits the funds into the merchant's account. This process generally occurs within 24 to 48 hours.
Okay, so which of the players do merchants interface with most directly, and what should they know about them?
Merchants have the most interaction with their gateway provider and the processor chosen through their acquiring bank. The gateway provider, in particular, can offer merchants valuable services to help them manage and secure their payments, such as reporting on all transactions, authorization and settlements, 24-hour help desk support, batch and funds recovery services, and security solutions that add an extra layer of protection for cardholder data.
Okay, so then if a merchant is not interacting as much with the associations and the issuing banks, what should they know about those players?
It's essential for each merchant to understand the significant role that the associations and the issuing banks play in determining the fees they're paying on every transaction. Likewise, since security has become such an important part of electronic payments, merchants should always stay abreast of any new regulations that are set forth by these governing bodies so they remain secure and in compliance. In the next course, we'll take a deeper look into card economics and specifically outline how the fees are calculated on every transaction, as well as what variations in a merchant's acceptance environment might cause these fees to go up or down.
Wonderful. Thank you for joining us for this general overview of the payments players and the card transaction process. Please join us for our next webcast, where we'll define the fees charged on every credit and debit transaction. From everyone here at Merchant Link, thanks for watching.